We've got a market alert. I want you to look at this. At one point, the Dow had seen gains of more than 2,700 points since the election. But as you see today, they've fallen nearly 2.5%, about 600 points from the record close. So right now, you can add another 44 points to the losses at the moment with 3 minutes left to go. If you're nervous about the markets and your investments, so are the ultra-wealthy. Tiger 21 is a group of more than 500 ultra-wealthy members with $47 billion in personal assets. The woman who helps them invest this is Barbara Goodstein, who has 3 pieces of advice that don't just work, I guess, Barbara, for the wealthy, but they work for people who are more of a retail, smaller investor.
Yes, they do.
Okay. You have nervous clients, I'm sure. 600 points off the top. It's not that much when you look at the grand scheme.
Well, they're not that nervous because we adhere to the 3 pieces of advice, as you said. And the first is learn from your blind spots. Watch out for your blind spots. We meet in groups to give each other advice. People review each other's portfolios, and that's how they identify the blind spots.
Okay, give me an example of a blind spot.
So a blind spot would be lack of diversification. You're concentrated in one stock. You're not properly allocated across multiple asset classes. That's a classical blind spot.
401ks, people put too much of it in their company stock.
Exactly. People don't divest of their company stock, and then they get caught short later. That's a Bear Stearns problem.
I would say, and Lehman Brothers too. Number 2.
So the second one is to learn from experience, your own or others. And that's where we find people understanding that they have to put money into areas where they're not going to spend that much money. So that's how we get people to invest in SPDRs, ETFs. People are investing in Vanguard ETFs now. They're investing in SPDR ETFs. They're also investing in different technology stocks, so Apple, Google, Microsoft, and that's how they learn.
Yeah, you like the AAA. You like Apple, and I believe you also like Amazon and Alphabet, which, of course, as you said, is Google. But what's number 3?
So the third one is basically do what you know. And we find that our members are investing in private equity because they know private equity. That's the category they're most comfortable with, so they're investing in the businesses that they've grown up in. We've seen that people have invested now 21% in private equity, up from 10% only 8 years ago.
Yeah, a little tougher for the retail investor to invest in private equity, though.
Yes, but people have the ability to invest in what they know, even through ETFs, as we've seen.
Yep, they're now PE ETFs.
That's right.
Great to see you, Barbara. Barbara Goodstein of Tiger 21.